Well, we are talking about backyard apartments, ADU builds. It's exciting. We're the next wave. That's the name of the company, and it's a fun name because it's an homage to surfing, the next wave coming up. That's a very San Diego thing, of course, and the next wave in San Diego housing, which is this infill project, the backyard apartments. So excited to get started.
Yeah, and of course we have to always start this off with a disclaimer. Uh, Andrew and I might think we're pretty smart, but neither of us are CPAs. We're also not lawyers. We're not making any representation as to guaranteed returns or anything like that. So please consult your CPA. Please consult your lawyer. Uh, and of course, we shoot for targeted returns, but once again, um, no guarantees. We're going to do our best.
And we are a 506c fund, so we're
Yep,
registered, and there's many claims that we cannot make, and we do not make those claims. So this is our disclaimer
exactly.
on those.
Yeah, and of course, at the end we'll talk about, but we 506c means we only take accredited investors, and so there's certain rules and regulations around that. But we're allowed to talk to it to a wider audience, but investors need to certainly have certain qualifications in order to be able to invest in this particular project. And so, yeah, we're going to discuss about kind of Andrew will talk about the job of your investment portfolio, which I think most of you guys know, but we kind of like to cover that. We're going to talk about, of course, the opportunity that we see here, and it's for today and it's for tomorrow and well into the future. There's just a ton of opportunity with the backyard apartments. Again, some of you showed up a little bit later, but we'd mentioned about kind of all the different regulations and forms that are coming down or that are either coming or already exist from the state of California as well as the city. So it's great. This particular opportunity, Choctaw Drive, which Andrew will probably talk a little about how he's come across it. He's been nurturing this one for a while. Risks, which in some ways I almost feel like we should put this one first because risk is the thing that we lead off with and just contemplating, how we minimize the risk. Of course, the number one job of your investment portfolio is to not lose money. So we're going to talk about that. And of course, exit strategies. There's more than one, which is very important. And Andrew will talk about how to sign up with us. And I'll talk just a little bit about myself and Andrew about his background as well. Long time ago, I'm the gray-haired one of the duo. I graduated from the Naval Academy and was commissioned as a second lieutenant in the Marine Corps and got an opportunity to, I call it an opportunity to go off to the first Gulf War. Came back, did a couple of different things in the Marine Corps, went off, got out, stayed in the reserves, but I got out. I got a graduate degree in international business, which kind of makes me now looking at the different things going on in our current environment pretty interesting. So I had started work at Qualcomm after that and spent a very good length of time traveling and living around the world. This is a really fantastic opportunity to get broad exposure. But after my daughter was born, I definitely got tired of doing all of the traveling. So decided to do the next thing that you can do in San Diego. So the first thing is the military. The next thing, somebody had joked this is you've done all the three things you can do in San Diego. Of course, worked at Qualcomm and now being in real estate. And so real estate from the development side, from acquisition side, and now here we are doing, backyard apartments.
Love it. And I'm Andrew Erickson. I'd say I'm an expert data analyst. I have a degree in applied mathematics. Stefan asked me about that, and I got him the transcript so he can validate me, right, Stefan? I was also an engineer at Qualcomm. That's what brought me down here to San Diego. Actually, I like to say actually that the beaches and the sun and the weather and the people brought me to San Diego, but Qualcomm is how I could afford it when I moved out here 12, 13 years ago. And since then, I worked for a few Fortune 100 companies and a few small companies, and then I've been a serial entrepreneur for about a decade now. And so I started up and sold several companies, and love building new things and doing the entrepreneurial thing. And I'm also a head coach inside the Titan Network, which is a business consulting for e-commerce sellers, which is my other business. And yeah, it's fun. It's involved with a lot of people there. And since in the last 2 years, I've been focusing a lot of my energy on these ADU builds, just because there's so much opportunity here. And anytime, that's one of the things I'm always looking for an opportunity. And when it's ready to go, you strike hard, right? So that's what we're doing.
Absolutely. So about the Next Wave Group, I'm a surfer, and so I think that I think at Qualcomm at one time there was some kind of spin-off that was called the Next Wave. So I like that name. Started off doing, I think I mentioned several things, but then when the ADU laws started to come into effect, I got more and more interested in them. As Andrew said, huge opportunity to strike hard. So went out and met Andrew and we decided to team up. So now we're the dynamic duo here. But Andrew, we each have our strengths that we bring. He brings the strength on the data side and the operations side, and you'll see a little bit more about what he's done. But we can now have streamlined underwriting, automating, and really work on scaling. So the whole idea here is that this is going to be something that's very repeatable. So everything that starts with acquisitions to underwriting to entitlement to the construction and then to lease up and sale. We want to be able to scale that and make that as vertical and efficient as possible so we can really have an impact on the marketplace.
Yeah, and
So
that scalability here is what brings us to our vision, which is to build 100 affordable units for people by the end of 2026. And that means, I should say, the path to, meaning that we've purchased and are permitting up to 100 and have built, you know, building it takes, 2 or 3, 1 or 2 or 3 years to build these things. So wouldn't necessarily have them all done by the end of 2026, but we want to be on the have the properties acquired for all that. And so that's just a big thing here. Big one of my big reasons is San Diego is such an amazing, beautiful, fantastic city that I love. The only issue, the people are amazing, the weather's amazing, the amenities are amazing, the education's amazing. The only thing that's not amazing are the housing prices. They are insane here. And so this is one of our big missions here is to have affordable housing. And the nice thing is that we can create a company that has great returns and builds great houses for regular people, just not non-luxury, not the 1%. This is the 80% that we're building homes for here. And I'll just talk about really quickly the kind of the jobs and investment portfolio. So I think a lot of you guys are pretty experienced with investment stuff, so I won't belabor it too much. But the big thing you always want to think about and protect is a hedge against inflation. Right? Inflation's come down kind of that, it's like 2-3% right now, which is kind of average. But real estate, as you kind of saw when we had inflation a couple years ago, real estate basically kind of keeps up with inflation, which is nice. You want to also have long-term growth, of course, and you're looking at that 10, 30, 50-year timeline for your retirement. And then the other one too, of course, is risk reduction and diversification. So let's just have put a lot of bets on a lot of different things just to have diversity there, right? I can see here is that I love this chart. This is from Tiger 21, which is basically a mastermind for rich people.
mhm.
And they asked all these different people, what are you investing in? And these are mostly private. These are mostly business owners, right? So private equity be usually their own business. But most of these people who are ultra wealthy invest a huge portion of their investment is in real estate. Marcelo?
Yeah. So, and one important thing is that there's two ways to invest in real estate, right? One of them is you can do so directly yourself, which is totally legitimate. People talk about real estate being passive, and there's absolutely nothing passive about it. When we purchase a property, we set up one LLC and we have one property that's owned by that one LLC, and each of those properties is a business. It's actually a business, right? So
Mm-hmm.
you can either decide to start a business yourself and manage it yourself, and that's certainly one way to do it. Or another way is to work with folks like Andrew and myself, so you don't have to deal with the tenants, toilets, trash, all the fun stuff that comes along with that totally not passive investment.
Hmm.
And so, of course, ADUs are I like to call them backyard apartments because sometimes people will hear ADUs and they think many different things, right? So the backyard apartment is the ultimate destination, and the ADU is the vehicle. So what the city of San Diego has done is, back several years ago, the state said you can build by right anywhere in the state of California. No local jurisdiction can dictate against what the state says, which is that you can build one unit by right, and you can build, which is called the ADU and a JADU, junior accessory dwelling unit. And there are certain limits on those. ADU can build up 1,200 square feet, and a JADU is maxed out at 500. The idea, I think, was basically you could build one larger unit in the backyard, and then you could build basically in your garage, or take a slice out of your maybe a master bedroom or something and turn that into a small junior accessory dwelling unit. Well, the city of San Diego said, we have such a problem, as Andrew had mentioned, we're going to actually take that and we're going to really run with it. And we're going to do a bonus program that says, if you build an affordable unit, and again, some of this also falls under, there's transit restrictions, you need to be near transit, and there's several rules around that. But if you meet those categories, then if you build an affordable unit, which is, we won't get too much into the weeds of this, but 80% of the AMI, the average income, median income, 80% of that, there's a chart for that. If you build to that for affordable, then you get a bonus market rate unit. And at least until recently, theoretically, you could just go on and on and on. So, if you had a 100,000 square foot lot, theoretically, you could build whatever, 500 units. That's going to change a little bit. But that is what allows us now to build these backyard apartments, right? So we're taking this vehicle and we're taking what some people would just call a granny flat and expanding that concept.
Yeah, and that's why these things are just great little vehicles, right? For building, for offering quick affordable housing to San Diego residents, and allowing us to build these quickly. And the returns are fantastic. That's why we like them. So we have strong returns, and every single thing we do, our goal is to return over 20% a year to investors. And the short timelines, the permitting and the builds, they go pretty quick. So everything's between 1 and 2 years, or 12 and 24 months. And like I said, there's a social good. There's a critical shortage of housing. We are building that middle housing there. So this is not Section 8 housing. This is housing for the middle, for the median person, the average person, right? It's not the 1% luxury. It's not the bottom 10% Section 8. This is for regular people.
Yeah, the expression used a lot is the missing middle, both for
Missing middle. Yeah, it's good.
purchase housing and for rental as well.
Do you want to take this one?
Sure. Yeah. I mean, high demand. I just recently read, I don't know where exactly I found it, but a statistic that San Diego is the fourth most expensive market in the country.
Hmm.
So you think of places like, New York, uh, San Francisco Bay Area, LA, I think San Diego, I think it's those.
Yep.
And so it's kind of incredible, because when I first moved to San Diego, that actually wasn't the case. We were an expensive market, but I was able to purchase as a somebody who had just gotten out of the military and just gotten a new job. I was able to afford a duplex with a VA loan, zero down. That's very hard to do nowadays. Very, very hard. So it's gotten very expensive. So the demand is, as our market continues to grow here, we actually have population growth. We're just not keeping up with demand, period. It's not happening. So that's one huge thing. Of course, as we'd mentioned before, this is like an arbitrage opportunity. So when we find either in a single family zone or multifamily zone, a house or a little duplex or something, maybe it's kind of run down, but it's on a larger lot, that lot or that house gets sold based on mostly on the value of the house itself. And then we're able, because we know we're able to leverage the lot itself, we kind of arbitrage that opportunity. And then when we're done, it's sold today as, an apartment building based on cap rates and income and its net operating income, perhaps in the future, even as individual units for condos. So that's pretty cool. And the mayor of San Diego keeps driving this really, really hard. And he's up to bat for us. We met with him about, I think it was a month or 6 weeks ago at an event. and he's just charging hard. And there's forces that are pushing, the NIMBYs and stuff. They're pushing back on some of this, but there's still a lot of support of the city council, still a lot of support from the mayor, and we think we're still going to continue very strongly along this path. And like I said, for years, we're going to have this opportunity for years.
There has been some news that they are getting rid of or canceling or limiting the bonus ADU program. So ADUs are by right. That's a state law. So we are able to build some. Of course, we're taking advantage of a special thing here that's in the city of San Diego. Those are likely going to change. These things change. Everything's changing. Everything changes a lot, right? Uh, the nice thing is that everything we have currently already is permitted, or we've already submitted, or we already have we're kind of already in line, and we get grandfathered in. So they would never take away a permit or take away something if you already have it. So there's already a property right. It's already like a Supreme Court ruling that when you have a permit, that is a property right. And so there's no worry about that. Now, what does it look like at the end of this year or next year or in 2030? That's a question mark. They're going to change, but there is a lot of talk about limiting some builds, but they're also talking about expanding some parts too. So we can get into that a little bit later if you guys want to in the Q&A. But just in case you did read anything in the news, there are some things changing. But again, like Marcelo said, the mayor is really behind this, and most of the city council is really into this too. So how do we do this? What do? Our business model is we acquire a property, we renovate it, so bring it so we can kind of get top rents at the very beginning of the property.
Yeah.
Then we permit it with the city. We build those ADUs, we lease them, and then we sell it. And the reason why you lease it and sell it is because you can get really top dollar. Because now people are buying this property based off of like rental income, right? And they can get an income-based loan, which works out really well. And so here's some cool new shots I got for you, Marcelo, of your experience here and of the last things you have already finished.
Yeah, Andrew, we got a drone, and I've got to convince him to come out and get some cool drone video of me surfing.
Yeah.
But yeah, so I actually, take a quick step back. I actually was doing, I did what now would be called an ADU, but at the time was a garage granny flat that actually the city said that I actually had to record a deed recorded document that said I would not put a stove in it and I wouldn't rent it out. So things have changed a lot since then, and that was about 6 or 7 years ago, something like that. And literally a 180. Now, this is in a multifamily zone, this Fond du Lac Corp. But there's the original duplex, and then that's a single family, single story, excuse me, that you can see there, little duplex. And then we built around that. We're able to build two-story units, an additional 8 units, and that's in a multi-family zone. And so that's one example and we just finished that. And Andrew, if you want to go on the next one. And I kind of mentioned Martin Avenue. That's one that actually sold. We did that several years ago, and that was a kind of my unpleasant experience with how restrictive a local jurisdiction in the state of California could be. And so this was pretty common all across the state. And that's why, again, I'd mentioned state said you can't do this anymore. So now I've got a whole bunch of units. And so I've built 5, and we have built 4, built 1 that sold, 4 that are completed, and now we've got 5 within the fund that are in various phases of either construction, planning, whatever. So that's what we have there.
Yeah, and of course, you're welcome to take a screenshot of this and check out the properties and stuff. And if you ever want to go visit them physically, we're happy to give tours. We give tours all the time to people, so they're fun. We even had a big party last week on the Delmar Avenue project just last week because the renovation is complete. And so yeah, we're always
Yeah, and in fact, that's something we'll start in May. We'll start a monthly, meetup where people can be invited to come, and we'll talk about, what we've done to rehab the existing property, add a bathroom, whatever, and then what we have planned and where we are in the permitting process.
So this is a fun one. This is our Bancroft property, and the drone shot makes it look really nice. You can kind of see Started in August, right? And the we raised the capital last summer, started broke ground in August. That was November. Here it is in February. Construction is, basically complete here. It's not quite complete, as you can see. There's a few things missing, the railing and stuff, but the buildings go up quick. And we're projected to rent that out this coming month, and then sold this summer, which is pretty awesome.
Yeah.
Is there anything you want to add on this one, Marcelo?
No, no, I think, you can see where it is. We got the drone, I think it was in February. So this isn't obviously not showing where we went from excavation and, putting in the footings and everything. But my goal now is, as long as it's within a reasonable size, anything from 4 to 6 to 8 to 10 units to get that construction done within of the buildings themselves within a 6 month window.
Yeah.
And we've now got the systems down where I feel confident we can do that.
Yeah, it's great. I mean, you're 10 projects in, 5 with us, so it's good. We're making, and it's only been, the funny thing is like, well, 10 is 10 a lot? 10 properties. Well, these laws have only been around for 2 or 3 years, so it is quite a bit. Cool. And our criteria, I won't go through the whole thing here, but some people like kind of figuring out like how do we pick these properties and stuff. And big thing right here is that we're looking for single family homes that are in like good or great locations. Buying it for 600,000 to 2 million or so in the city of San Diego, not the county or the extended area. Right now, there are some things we're looking at outside the city, but right now our model is inside the city. We want to have a good sized lot and good zoning and good buildable area, and then over $2,000 a month too in rent. That's just kind of the numbers there that make the most sense for us to do. And the nice thing is that with that criteria, it's pretty refined what we need there. We actually built an automated property underwriting system. So I have a tech background, and I built a tool that automatically scrapes Redfin, grabs all the data off of Redfin, everything that's listed on the MLS, and pulls that property information in, filters it based on zip code, based on rent, based on lot size, based on a few other factors like that, and then pulls in the zoning information, pulls information from all over the internet, and it like does an automatic underwriting for us. And so we're technically underwriting every single property that's for sale in the city of San Diego. And from there, we can kind of pick the cream of the crop, right? And so we go through the automated processes there. We then, of course, have a manual review, build a detailed pro forma, which we're happy to share with you guys. And then we also talk to land use lawyers and architects who specialize in this stuff, just make sure we do it correctly. We're doing this thing correctly, and then we make an offer on the property. And the nice thing is that this is the beginning of the process. We're already in the second half with this property we're going to be talking about here in a second. We're already in the second half. We're already done with this, so there's no question mark. It's already been completed. And that's this. That's this property right here, which is on Choctaw Drive. And Choctaw, sometimes people ask me, what is Choctaw is a Native American tribe, right? So there's a famous Tim McGraw song that has talks about I'm an Indian outlaw, and talks about being a Choctaw Native American. So, but the current property right now is a 3 bedroom, 2 bath. Rents in this neighborhood in college area are 2,200 a month for a 1 bedroom, over 4,000 a month for a 3 bedroom. Our lot size is almost 7,000 square feet, and you can see all the stuff here that we talked about before. This is very much fits all that criteria. The permits, the permits will be in hand in June, meaning they're not literally right now, but we're in the last phase of it. So there's no risk. The city already said yes. Right now, we're just finalizing, how big is the pipe, how big, there's some load bearing. We have to like kind of triple check. So at this point, we're kind of just crossing our T's and dotting our I's to get the permit, but it's already in hand. There's no question mark whether we can do this. We are doing this right now. And then also, I just want to talk a little bit about the neighborhood. You can see here that this is in the neighborhood called College Area. It's the area near the San Diego State University College, right? And you can see here it's close to the freeway. It's close to San Diego State's campus. There's also a lot of restaurants and shopping all within walking distance. So it's about 3/4 of a mile, so easy walk or bike to campus, and then 2 blocks from shopping and restaurants. So anybody who might want to live a car-free lifestyle can very easily live like that here if they're a student or a teacher or even just a regular resident, right? And San Diego State, I didn't realize how good of a university it was when I moved out here because I live just north of it, but they are growing very quickly. They have over 36,000 students enrolled. They're a fantastic university, top rated university. And the nice thing too, we're not necessarily going to rent to students, but the nice thing, if you do rent to students, or rent to anybody, right? But if you do rent to students, there's all sorts of advantages of like low vacancy rates, and usually if the student themselves doesn't qualify, the parents can qualify the students, right? And there's all sorts of great stuff there. And so here's
Yeah,
what
and just really the name Choctaw, also the San Diego State, the mascot is Aztecs. They're called the Aztecs. So
oh
all of the
yeah,
people around there have names like they're all Native American, Mohawk.
nice.
They're all so just kind of a little aside.
I never put that together. That makes sense.
Oh, you didn't? Yeah, yeah. All the streets right around the campus all have Native American names.
Yeah, so here's what the property currently looks like. So you can see there's a big backyard and a little garage here. We're gonna rip that garage down, and we will not touch the front property here. This house is staying completely by itself, and then we're gonna rip down that garage and build this. And so we have a 2-story, 1 bedroom, so a nice open, well, for a small unit, living room area on the bottom, and then the room on top here. And there's 8 of them, 8 units. 4 units look like this, and then this will be a fourplex here, 4 1-bedroom units. And you can see we're filling up that backyard quite a bit. So that's it. The purchase price, we're doing just over $1 million. Like I said, we're building 4 2-story, 1 bedrooms and 2 baths, and then 4 1-story, 1 bed. So like a little nice mix there, just kind of, so we have a little bit of variety on what we can offer people when we rent them next year. We'll be paying about $80,000 or $100,000 in city fees. Our estimated cost to build is 1.6 million. Take us about a year, 10 to 16 months to build and lease and sell. And at the end, we're expecting to have $20,000 a month in rent. That's just over $2,000 a unit. And then we expect to sell this property for 3.4 million. That is assuming no appreciation in the city, right? We're assuming that we won't have any just a natural market growth, where we're just assuming flat market growth. And preferred return, which means that all of the profits, our most important thing we're trying to do is make sure that we return all of the capital invested, so all the return of capital when we're done. Then after that, when we have profits, the first profits go to make sure that we are able to pay investors at least a 6% return inside that year. And then we go, so 100% of the profits go to the investors for that. And the next part, we split most of 70%, most of the lion's share of the profit goes to the investors till we get to 16%. So we can make sure what we beat the stock market. So I like to think of it like this is beating the treasury, which is like 4%, 4.2 right now. And then this is beating the stock market. And then our expected return, we can't guarantee anything, but our expected return is 20 to 26% inside of 12 months. So you want to add anything on that, Marcelo, before we get into the risks?
No, I think that's it. That's good.
Cool.
Yep. Yeah, so we, of course, the key thing, like I said, I almost sometimes want to, especially nowadays, put this at the front. So kind of as Andrew had said, our goal is to, beat treasuries, but actually our goal is to, what is it? I don't know if it was Benjamin Graham or if it was Warren Buffett, but rule number 1 is don't lose money. And then rule number 2 is refer back to rule number 1. So in terms of risk, as Andrew said, I'm going to emphasize it again. This project is, it's shovel ready, so there's no longer any kind of considered risk for entitlements or anything. Those are basically done. So that's super important, right? So we now have something that's ready to go. Added a ton of value to the original existing property, just as it stands, because of course now you have something where you can add so much more value to it. And then we want to make sure we cover things like interest rate risk. So one of the things we do is we make sure that we raise enough money so that we still get a solid return to our investors, but then we're also adding value to the property when we're done, so that we end up at about 50% roughly of equity position relation to the property value, right? And why do we do that? So that if we absolutely had to, we could refinance and keep the property. Our goal is to sell it, but we want to be able to have that kind of flexibility in order to basically reduce our risk, right? So
We've been offered very aggressive loans that we could take, but it just doesn't seems too aggressive. So
yeah,
yeah.
yeah, we like being conservative, especially now. Who knows what's going to happen, but we like to be able to think that if we absolutely had to, that we could refinance and maintain the property for a few years and ride out any storm. So that's one thing. The other, again, project timelines. We've standardized this stuff to the point now where, as I said, things can happen. I think the biggest risk in the timeline now kind of comes at the end when we have to actually hook up with a regulated monopoly, which is San Diego Gas and Electric. Um, all of the other stuff was within our control, and so we feel very good about that. In terms of cost, of course, and there may be into the end we can talk about, might be some questions about inflation and tariffs and things like that. But I'm the general contractor, and so I'm able to, as much as possible, keep our costs very aggressive. And in fact, I'm kind of seeing and hearing some things. I might even be able to reduce our costs somewhat potentially. Um, so we keep a good tight control on that. And then, of course, I don't want to beat it to death. The regulatory challenges, they're out there, but they do not apply right now at all to this property. So we're ready to go on this one.
Yeah. Kind
Yeah,
of.
and then I think in terms of market, and risk mitigation, we've talked about. We've done a lot of research on this. We really understand. Andrew, in fact, he puts out a very, very good out on Facebook and different sites, puts out fake ads to see what kind of response we get. And so we get something that looks very, very much like what our property is, and kind of like down to the street location, and says, hey, here's what it is, and he can talk about you know what the results of that are. But so we make sure we're really with real live data, not just making blank assumptions. Our projections, we're not projecting any kind of rental rate increase at all. And we also have third parties go and verify our information. And like I said, we go into the high equity position. So yeah.
Yeah. I
uh,
think we
kind of
I
kind of
can just
talked
add.
about yeah kind
Yeah,
of talked
sorry,
about
go ahead.
yeah, go ahead, Andrew.
I was gonna say adding on the fake Facebook ad. Yeah, I just want to make sure that I see all these comps and I see all these people tell me how much they think they can get for a certain thing in a neighborhood. And what I do is I just take photos of what the ADUs would look like when they're done, and I put it on the street corner, the same street corner, and to see how many people apply for that Facebook post, that Facebook housing offer, I guess. I gear it where I need to get at least a dozen applicants inside of a week. That's about the sweet spot for rents. And so for this one, I found about 2,200 a month is kind of the sweet spot for these units. We're underwriting at 2,100, so it's 5% under that, just to be a little conservative. And that's also, again, like Marcelo said, not assuming any growth in the market and stuff like that. We're just assuming everything's flat for the next 12, 18 months, just to be conservative.
Yeah, and so I think, again, timelines and cost overruns, we now feel pretty confident about this. It's what's called type DA construction, wood, stucco. We have a team in place, and even teams as we expand to be able to take on uh, the effort and get it done in time and on cost.
Yeah, and we already talked about the regulatory challenges, but again, the city is we're already locked in. We already have the permit in hand, and the city is pro housing. So That's it. So, last thing here that we're going to finish with is to talk about the exit strategies. So, the number one thing we're shooting for is to lease it and sell it. Like I said at the beginning, that seems to be that's kind of the premium. It gets you the premium, gets you in, gets you out, return of capital as quick as possible, and also it seems to give us the highest return. And so that's the number one thing. That's plan A, but of course you want to hope for the best and plan for the worst. And so we have other plans just in case. And one of them is to just refinance and cash flow it. Like it is a cash flowing property. So just hold it and let rents pay you, right? So collect that $20,000 a month and use that to pay investors and pay everything, right? So in case anything happens, that's our plan B. And then at this point, I guess this is already a mute point because we're already shovel ready right now. So there's that opportunity to kind of sell it without actually being without actually building it too. So yeah, and then we'll just go. Yeah, okay, we'll go. This is our last slide here. So yeah, so like I said, we all we do is ADUs, right? So this is our fifth project inside of our company together. Marcelo's 10th project building. Marcelo is the GC. That's one thing. Some of the developers, they're just kind of hiring out random people, and those GCs don't necessarily have as intricately in, connected to the project as much as Marcelo is, since he is a GC, tech driven. So we had that automated underwriting thing that's pretty awesome, and then also the co-investment too. So this project, this is something that so the we put a lot of our own capital. So obviously Marcelo's main job is this, and I'm putting down $100,000, at least 100,000 on every deal. So I'm doing that the same for this one as well. So that's what makes us different. So that being said, I'll get you guys a link to the thing here to the investment thing if you want to do a soft commit. But yeah, that's the end of the presentation.
Hopefully it wasn't too long.
Good
Ah,
job.
thank you, Valerie.
That was great.
Yeah,
Both of
love
you.
it.
Yeah.
We've done a few of these already.
I guess, yeah. And this is my first one, and it's very interesting. And let's see. So when I go down below, I could, well, trying to figure out. So I put I'm interested. How did
Yes, let me get you the link
I don't know
here.
why I tried to move it, and it keeps clicking on leave meeting, and I don't want to leave the meeting.
Oh yeah, no, it's link. I'll get you the link here. I'll post it here in the chat here in a second.
Oh, okay.
But yeah, no. So the soft here, I guess I can pull this back up. So it'll be a different picture, but this is what it looks like. And so we'll
Oh,
get you the link there, which is I'll just put it in the chat, but that's the link, and you'll see an opportunities. It should pop up. It should look like this when you pop it up. But opportunities,
in
and
this in
you'll
the
see
Zoom or in like my email.
on like a browser. I'll get you a
Yeah, a
link right
browser.
now.
It'll pop up. It'll just like it'll be the next when you click on it, it'll pop open in a window.
Yeah.
Okay.
Yeah. And put this. Great. Well, that is it for the presentation, and we have happy to answer any questions anybody might have.
So
Andrew is
we're not
super
quite sure.
anxious to show his spreadsheets.
Can I show the spreadsheet?
I was almost was going to joke during the presentation that Andrew was talking about underwriting. I almost said like he did all that on his vacation.
Oh, geez. Impressive.
Like that was his vacation. He didn't do it on his
Oh.
vacation. That was his vacation.
Along with being a dad and everything else.
He loves that stuff.
So real quick, it's Carrington Horton here. I had a question. Really was impressed with the last time that you guys presented that battle testing for Bancroft. I'd really be interested in kind of seeing another scenario. I know you guys didn't do it for Tennyson, but I got in on Tennyson anyway, but I felt pretty solid about it. Oh, is that something that could be done for this project as well?
Absolutely. And
Yeah.
we can definitely do that, Carrington. The battle testing that I did, at least I haven't written a report on it, but at least my own battle testing so far is that again, with fairly, we're trying to be conservative side of realistic of all of our assumptions. There's lots of things you have to assume, right? But the big thing that we're seeing is that we would have to see a 15% drop in the market. So if we do see the market soften, who knows? We're predicting zero. Average is 6% up, right? But if you see a few percentages coming down, we have to be conservative and plan see what happens if that happens, and we can safely no we will not lose any money unless the market falls more than 15% in 12 months, right? And then if we would lose all the investor money if and it always scares me to say that. I'm not trying to speak into fruition. I'm just making sure we're conservative. The entire project would have to fall. The entire real estate market would have to fall 46%, meaning everything in San Diego would have to have value for us to lose investor money, or lose all the investor money, right? So 15%, we start losing, 50% we would lose it all, right? So assuming the market doesn't have in the next 12 months, that wouldn't happen. But again, we have to be conservative and see what happens if that does happen. But Karen, I'm happy to write a report. I'm happy to write a thing and share it with everyone, and making sure that you get tagged on it, Carrington.
Thank you. Yeah, I appreciate it. You did a fantastic job with that last time. It was to me, it was a good piece of information.
Good. I love talking about numbers. I'm usually told by many people they start glazing over when I start showing numbers. But if you like the numbers, I'm happy to talk numbers all day, Carrington.
Definitely good with numbers, so
Sweet.
Any other questions?
Stefan or Chris or Tom or Kira or Valerie.
Well, so like, what's the minimum of an investment, or how, I guess is it by unit, or is it
it's per project. So in this particular, well, in all of our projects, but it's $50,000 is the minimum.
Oh, okay.
So exactly. So if you wanted to, let's say, and put 50,000 here, and 2 or 3 months from now we have another project, then you could put another 50,000 on that one. We have several investors that have done that. They've put 100,000 on a couple of different projects, kind of spread it out.
So if I invested 400, that would go over a few units or whatever, be just part of the investment.
It would be, well, they're tied to each specific project, which is
right. Okay.
Which is good. There are ways to create funds. They're kind of, typically a fund is called a blind fund. So that would mean you put $400,000 into it and we'd go buy several properties. But this is different. You actually are looking and investing in one specific project with a specific amount of money. And people really like that. So it could be, let's say, without diving again too much into the weeds, but you could do this one, we do it and we sell it, let's say 16 months from now. But then we buy another one that you put 50,000 into, and we end up deciding maybe it makes more sense to keep it for 2 or 3 years. That would maybe be a longer term one, perhaps get the tax benefits from the longer ownership and whatever. So there's ways to mix and match it with the structure that we have for our particular fund. It's pretty cool. It's pretty flexible.
And to be clear, 50,000 just for this address, not 50,000 times 8 for this.
Oh, okay.
Yeah, I'm raising $1 million total for the build.
$1 million total. Okay.
Yeah, so it's roughly $1 million to purchase, $1.5 million to build, raising $1 million in equity. We're borrowing $1.5 million in debt, right? And with that, Marcelo and I both personally underwrite, or we personally guarantee. And that's, I guess, another thing we should probably put on the thing is that, like, we personally guarantee over $1 million loan. And but $50,000. And so, and every raise we've done, we've raised inside of a month, at least a month, if not 2 weeks. So, so far we've been able to raise it all.
And I wonder, would there be any complications for me coming from Washington State? Money transfer?
Half of people that invest live in San Diego,
Mm-hmm.
or Southern California, I guess with Carrington, so Southern California, and
Yeah.
half live outside of California
Oh, okay. Then there's not a complication there.
now. And we're able to, we can do, obviously, most of our investors just do straight like cash investments, just a regular cash investment. But like we told Stefan, we can do self-directed IRAs. So like we can use retirement money. There's a few things we have to do to be careful, that we have to kind of structure it in a special way, but we can,
Mm-hmm.
it's on the investor side that they have to structure it. But we've actually already helped others set it up and then invest in the project.
Yeah.
And then like, so basically I am selling my house up here and I don't think I have to pay like capital gains on it. If I, and I'm not sure, I gotta check Washington State. But if I invested with you, maybe I don't. If they require that, I don't know. I guess I have to check on my own. and see.
Yeah, I can.
Yeah.
We're not CPAs.
No,
So-
or am I?
So
Remember the first slide.
Yeah.
But
I
that's
already
something
feel
I
like
could
we might
check
be
on.
getting into a weird space here. So
Yeah.
Well,
my
I
house is not
cannot
that
give professional
CPA.
advice. I will tell you,
Yeah.
Valerie is my aunt, Marcel, if you didn't catch that. So,
Oh, okay,
Valerie,
didn't know
I'm
that.
happy to call you and give you non-professional advice.
Yeah,
if
we'll
you
talk.
want.
We'll talk. Yeah, definitely, for sure.
But yeah, it should work. We'll
Yeah,
have to, I don't know about the no capital gains. There's a lot of like caveats on that, but
Yeah, and
but
Washington State is different than California. So
yeah,
yeah,
So,
Yeah,
yeah.
there's federal and state.
yeah.
Chris has a question here about self-directed IRAs, and yes, we yes, can do self-directed IRAs. Very simple.
Not only can we do, we love self-directed because this is another whole little like a personal thing with me. I have my self-directed, it's a 401k, but whatever. And I have it invested in real estate. And through all of this craziness that we've been going through, I felt very sanguine because my property, I'm good, right? So, with the whole 401k and self-directed IRA thing, you're able to get outside of what Wall Street wants you to do, which is to get into their products that are limited and they control and they can siphon trillions of dollars out of it. So I'm excited about offering to people to be able to do this. The other thing is that with a few caveats, you want to talk to your CPA, but the money stays within your IRA or your 401k. So there is a long-term capital gain consideration with this. So we purchase, let's say, we close this whole thing in June, and then it sells next August of 2026. There is, if you've done it with your own cash, there is a long-term capital gain consideration. If you're inside of your IRA or your 401k, then with certain caveats again, then there are not. That stays within your, within that tax deferred entity. So that's really cool. This particular model works really well within a 401k or IRA scenario.
Yep.
Great.
And then also, Chris, to make sure we explicitly answer your question of when we're looking to fund. So this is our first offer, right? So technically we're at $0 right now because we just opened it up this morning to invest in. And we expect that we'll be done by the end of May or early June, the whole $1 million. And of course, I'm putting in some of my own too, so it would be less than $1 million from other investors, right? And then we're looking to break ground the first week of July, and so June. So raise in May. Get everything kind of ready, all the subs ready, the financing, the loans, and structure all that stuff in June and break ground in July. I would say, let's just say majority of the structure will be built by the end of the year. Hopefully kind of finish and finalize in Q2. And we should make this a slide too. We should actually show the timeline of the whole thing. And then finish in Q1, leased and sold in Q2, potentially maybe kind of going into Q3, but that's the timeline. So we're collecting the capital in May.
Cool.
Cool. Well, we're right at the hour mark. I want to make sure I'm respectful of everyone's time. Do we have maybe any last questions? Great. Cool. Well, if that's let's see, we have one. Yes, Chris, we always happy to take emails, and Marcelo and I are always happy to jump on a call, phone call or Zoom call if you'd like. So you can, if you want, you could just do a soft commit on the page there. Marcelo, can you check on your side just to make sure that you're seeing
I'm seeing it.
You see it? Okay, cool.
And then
Perfect.
I can click on it.
Yeah, that website, it's our, professional site that allows us to it's a third party called Avestor, and it's this big network of 1,000 different people who are doing the same business model, and they have everything structured nice and clear in that portal there. And you just sign up if you haven't made an account, just sign up, hit the sign up button, use your email, and then you can do a soft commit. Soft commit has no legal implications. It's just you saying, I'm interested. I think I like this. I'd like to learn more. I want to see more. I want to do the underwriting. I want to jump on a call. I want to visit the property. Happy to do all those things. But it's, you're not actually committing at that point until there's not really a commitment until you actually wire the cash. So it just helps us kind of let you raise your hand saying, I'm interested, officially interested. Marcelo, Tom has a question about 1031.
Yeah, 1031 does not apply in this case. Again, I don't want to be the CPA, but a 1031 is if you actually, you sell a property that you own, let's say wholly, and then you purchase this property wholly. So this is a little bit more, even though you do get tax considerations and breaks if we were to buy this and keep it for a long time, it's more like you're buying kind of like a stock. So yeah, you're not able to 1031 exchange around your share of ownership. So it's kind of like a little bit of a mix of a interesting mix between like a stock and actual real estate.
Yeah. I wish there's a way to 1031. I feel like there would be.
Yeah, and I know we're running over time, but the only way to do a 1031 exchange is if literally we had the fund, and then Chris, you would buy like, let's say 50% in your physical name, which means you're signing the guarantee, you're on the loan, etc. And then you have that 50%, and then you could do something like that. But that would be the only way to do it. As a passive investor, it's not possible.
If you want to guarantee the loan with us,
we can
happy to talk. No one else guarantees a loan though, so that's one thing that is a limited liability. That there is no, you can't lose more than you put in. There's no open liability there too, which is nice characteristic of the way we structured it legally. And we have a very expensive real estate lawyer who got all set up, and we're also in a community of other people who do this professionally too. So there's feel very confident on the legal structure there.
Nice.
Cool. Awesome, guys. Well, we're just past the hour. I want to make sure we're respectful of everyone's time. So if you want to send us an email or a text or whatever, I'll put my phone number in here.
Yeah, feel free to reach out to either of us, either, email or phone, either, Andrew or myself, for sure.
Yep. And I appreciate, thank you guys for spending this last hour with you.
Thank you so much.
Thank you. That was awesome.
Thanks, Valerie.
All right.
Bye-bye.
Take care. Bye-bye.
Bye.